super excited to share. So let's dive into it. This monthly live training is over the simple 1 DTE ORB, which stands for opening range breakout. Don't worry, I'll explain that more in a second if you never heard of it. Strategy that generates $200 to $500 a day without having huge losses like most zero DTE traders have. You guys excited for this? Because we've got 10 people on the call. Want to hear some thumbs up? We're good to go. We've got a lot of people on here. Awesome, awesome, awesome. We got thumbs up. Sweet. We're good to go then. So this fits into our option spot portfolio system where it comes down into two different breakdowns. Number one, we have a daily income system, which is this ORB bot that I'll explain here in a second, and our monthly income system, which you guys are very familiar with. We run bullish bots and bullish markets, bearish bots and bearish markets, and then we can add various other bots like free money bots and things like that to capitalize even more deeply on different small setups. But the monthly income system is designed to help us generate anywhere from 3 to 5% a month consistently in every type of market by aligning the right strategy with the right market, and we're able to do this consistently. Now, here's the problem. A lot of you guys love seeing daily activity, volume, your ADHD, and you just want trades to be going on. And so that's where we invented the daily income bot to help you see that daily activity, daily movement, and profits, so that you can see stuff actually happening without risking too much of your money. And that's what we're going to dive into. So this strategy is an opening range breakout strategy. If you've never heard of it, it's basically the name explains it all. Opening range breakout. We look at the opening of the market over a certain time period. This time period is 60 minutes. We look at the first hour of the market. We check out the high. What was the high over the last hour? Whenever it breaks that high, that's when we get into the trade. So we basically set over the first 60 minutes, what is our resistance point? What's the high we've reached? As soon as we break that resistance, meaning momentum is moving higher, that's when we enter this trade. So here's an exact setup for one of the trades that happened last week, okay? Here was the first 60 minutes of trading activity. Did pretty well. This is a 1-minute chart, by the way, so that's why there's so many candles. 1-minute chart, 60 candles here, 60 minutes of trading activity. Our high got put right here. So we drew out the high. The high got put here. As soon as the high broke, that's when we entered the trade and traded it to the upside. That's what an opening range breakout is, step by step. Look at the first 60 minutes, define the high. Once the high breaks for that day, then you enter the trade. And this was the exact trade I did here. It made me about $113. So what are the exact strategy rules behind this? The exact rules are quite simple. 60-minute opening range breakout, as I just discussed. We look at the first 60 minutes, chart the highest point. Whenever that highest point breaks, that's our entry. Why? Because momentum's pushing higher. We're breaking resistances. We're probably going to play that quick upside move. DTE is 1 DTE. Okay, so you're right. I've never been a fan of 0 DTE, and back testing has showed this. I did a lot of testing before doing this. Obviously, I'm only going to give you something that I'm willing to use myself. 0 DTE had a way lower win rate than 1 DTE. And you might be wondering, why go 1 DTE? Because it gives us more time, simply put. Okay, we have more time to be right. The market trends up. If we happen to hold that trade overnight, guess what? Not volatility, theta decay still impacts overnight activity. So that overnight trading period, theta decay is doing its work on the position. So even if the trade opens where it previously was the last day, guess what? You still are making money because of that theta decay increase. So a lot of times you hold the trade overnight and then you close it first thing that next morning because theta decay got you into your profit target. So anyways, 1 DTE gives us more time and has dramatically increased our win rate compared to using a 0 DTE. So it's still a very short-term trade. Most of these trades only last 30 minutes or so, but if you do happen to hold longer, that's what happens. Okay, here's how we structure the actual trade though. So 1 DT, we do a short put at the 35 delta. This means we chart out the high on a 60-minute opening range breakout. As soon as that high is broken, we sell a put at 35 delta. We then buy the put below it. That's $20, a $20 strike price below. We do take profit at 40%, and we do a stop loss when it hits our short put, aka it touches our short put. Here's an example trade, okay? July 8th, these are random numbers made up, didn't happen. Maybe it did, I don't know. I just made up these numbers. So let's say it's July 8th. We have an opening range breakout where it broke the resistance at $5,500, okay, on SPX. Okay, that means the DTE we're going to do is July 9th, so the day after. Our short put, let's just say a 35 delta is roughly 5,350. And then what we're going to do is, oops, that got messed up. I did $200 difference. It should be 20. That means our long put would be at 53.30. So we'd have a short put at 53.50 and a long put at 53.30, $20 difference for the long put. Let's say a trade price of around $4. That's the average about you're going to get. You're going to get between $2 and $6. So a $4 average trade price is what you'll get, which means that puts your take profit. You'll close the trade once it hits $2.40, and you'll have a stop loss once SPX hits 53.50. That's the strategy. If you want to trade it yourself manually, that's exactly how you would do it. But obviously, we're not going to do that because we like automation. But let me give you three real examples of real trades that I've done since implementing the system. Here is July 2nd when I started running this bot in my account. Okay. You can see here, this was the high that the first 60 minutes of the market set. Later in the day, the market broke this high. My bot entered a trade. You can see here at 10:40, it entered the trade. And the next thing you know, the next morning it closed out. Even if the market would have stayed where it was the next day, we still would have been able to close out for a good profit. But in this case, got in for $5, got out for 30 cents, led to a profit of $470. Not too bad. Example number two here. The first 60-minute high was right here, which made this our resistance. As soon as it broke at 1040, shortly after the high was formed, what happened is we can see here the market trended up pretty quickly, pretty fast, pretty well, which led to us closing that trade in 26 minutes, resulting in a $113 profit, a 40% return on my money. Not bad at all. Example number three, loser. Not all of them are going to win here, and I'll show you the stats on our win rate here in a second. But we had one, two winners, and then the third one, which was yesterday, July 8th, was a loser. You can see here, this was the high from the first hour. It broke here for a brief second, came back down, and then it exited right here. And so again, got in for about $5, got out for about $7.60, lost $270 on that trade, was in it for about 48 minutes. So those are three real trade examples there. Now let's show you what you can expect long term. Again, back tests are not guaranteed of future returns, but they do help us understand some common rhythms and patterns. So again, just for that disclaimer there. And we're looking at this as a very consistent return. Again, you have wins, losses, whatever. But what we're looking at is, in general, we have a 60, I think it's a 62.5% win rate, meaning 63% of the time you're going to win. And when you win about $252. So on average, you're making $250 per one contract per trade. When you lose about $311. And so this checks out, and that's why I wanted to show you. A 66% win rate means you're going to win two trades out of three. And so that means one of the three are going to lose, but you're still going to net make a profit long term. And that's exactly why I want to show these examples, because the last three trades show this historical data pretty well. You can see here, made 500, winner. Made 100, winner. It's a $500, about $550 profit combined. Is that 470? What is that? 500, $600 profit total with two wins. And then let's just say $300 loss. So three trades. What happened here is I ended up with a net of a $300 profit with all the three trades and had my 66% win rate because around there, because I had one loser out of the three trades. Now again, backtesting shows that roughly the same. You can see here over the last, again, this has been backtested since 2022. But all the numbers I could include in here without you having to squint your eyes too much. As you can see, February, this is all with one contract, made 700, March made 400, April made $8, May made 1,500, June made 1,700, 1,200. This is all with one contract, which is amazing. Shows you the power of what we can do if we just do one or two contracts at a time, just to add and supplement some of the returns. What's amazing here is our max drawdown that we've seen in a single month is largest is $413, and that was the largest from 2022. Is this most recent trade in June 2025. $400 drawdown. What's great in the way that I'll talk about here in a second is structuring your buying power used in a way where your monthly income bots more than cover the losses that you'll ever have using this so that you have your consistent income. And if something goes very bad on this one DTE strategy, well, you're still going to end the month break even. Okay. So that's the whole goal, to have this to help supplement returns without cutting and massively hurting your overall return. So here's how to automate it. It's super simple. I wanted to make sure you guys had the easiest way to do it because, again, that's the whole goal, automate with ease, right? So log into the options auto trader. When you go to the strategy database under our options bot portfolio, which only Oat Income Accelerator clients like you guys have access to, you'll click on that and you'll see a daily income bot right here. 62% win rate, about $250 win when you win, about $300 and 11 loss when you lose. Click start using this bot. It preloads all the settings for you. Yes, it even watches for the opening breakout for you based on the 60-minute breakout. And you just put how much money you're going to use. Now, the question is now, how much money should you use? So let's dive into buying power allocation, okay? Buying power allocation, this is after thinking about it for a while, the way that I do it. So this is a rule that you guys already know of. That's our 30 to 50% rule, typically called the 30% rule. I'm going to give a second here to screen. The 30% rule, which comes from the futures options world, because when we use futures options, that buying power is variable, which means when we enter a trade and it says it takes $7,000, if the market goes down, that trade will require more money from us. Now, this doesn't apply to ETF or stock options, but it does apply to futures options and just across the board. And in order to make sure that we manage risk correctly, we should never have all our account in one trade. So what we do is we break that down between 30 to 50%. If you want less risk on the account, you put 30% of your account into trades. If you are moderate risk, about 40%. If you're higher risk, more faster growth, you put 50%. Okay, cool. Now that we know how much money from our account to allocate as a whole, how much goes to the daily income versus how much goes to the monthly income bot. And so that's why I break down. I was like, how should I do this? And I was thinking like max drawdowns, all that stuff. And the max drawdowns actually worked very well with the 80-20 rule. So this is something called the Pareto principle, which states that 80% of our results come from 20% of our efforts. So when I look at it, what is the most consistent long-term results we can do as option sellers? That is long-dated option selling strategies, which we're already doing our monthly income system aligned with the market. So that means 80% of our buying power should be focused on what's going to make us a majority or a bulk of our money. So that's where I put our monthly income system as 80% of our invested capital, and then the daily income system being 20%. And this actually works out in such a way where your max loss on the daily income system will be roughly equal to your average monthly profits of the monthly income. That way, worst case scenario of a bad month with the daily income bot, then guess what? You're still breaking even for the month. Let's put this into real numbers, okay? If you have a $10,000 account size, okay? I know a lot of you guys don't because we don't take people in this program under 25,000, but if you do, I just want to show an example. If you're under 25,000 right now for some reason, maybe you have another account you're trying to grow up to 25,000, right? Because you need 25,000 to properly implement our monthly income system. If you're under 25,000, whether it's just your total account or another account you're trying to grow, if you're under 10,000, what I would push you to is I would try to do it all inside the daily income bot. That way you can grow that quickly, then get to a point where you're over 25K, and then you can scale from there with our whole options bot portfolio. Now let's break down an average account size. The average account size between you guys is around 50 to 100,000, so I wanted to give you an example. The $50,000 account size, okay, let's assume we're allocating 40% of it, okay? So that means this. For trades of the 50,000, $20,000 of it would be in trades and 30,000 would be in cash. How do we split this up? 80-20. 80% of our funds will be inside of our monthly income system, which is our bullish and bearish spots that adjust to the market. And that means $4,000 of it would be in our daily income bot. For a $100,000 account, that means if we're doing 40%, we'd be trading with 40,000, 60,000 would be in cash. Splitting this up between the two, around $32,000 would be in our monthly income bots, and $8,000 would be in the daily income system. Now, the daily income system, let's say we're allocating, what's an easy number? $3,000 to it. Each trade of the daily income bot takes about $1,500, $1,500 to put a trade on for this daily income bot. So it still does take some money. So if you have, let's say, a $4,000 allocation, you can set that on the on your buying power allocation here. Oops, sorry, I should have put it there again. You can set that amount here, but the only thing is your bot will only place as many trades as you tell it in the trade details. So if you have more than $1,500 to allocate to this bot, what you need to do is you need to divide whatever amount that is. So let's say 4,000 by 1,500, and that gives me two trades. I know I can open up two trades with this bot. So in that instance, what you'll ideally want to do is you'll want to go into the trade details and up the quantity from one quantity to two quantity to match the buying power used. So in other cases, like our monthly income system, what we do, I'll just leave it. What we do is we just set the max buying power and we'll slowly enter trades over time until we've hit that max buying power. Now, for the one DTE, we're not going to be opening multiple trades. We're only going to have one trade running at a time. So we want to make sure that we set the quantity of the number of trades we're contracts we're opening at a time to be equal to hit that buying power usage. Now, I know I've gone into a lot of stuff, but overall, does this make sense? Any questions, put it in the chat, put it in the Q&A channel, and I'll make sure to get to it. But overall, I hope this made sense. It's something that you guys are looking to deploy soon, whether that's just on your paper account or on your live money account. Sharon says makes sense. Awesome, awesome. Makes sense, makes sense. Any questions? No questions? That's always good. I see some coming in the Q&A channel. Paul says, what time of day, time of trading day can entry occur? Great question, Paul. Let's dive into it. Let me pull up my trading view. Let's dive into what this exactly looks like. Okay. Sorry, those were all the drawings I put together for today's thing. Okay. This is SPX, okay? Obviously, opened, gapped up this morning, ran huge, then we dipped. So if we're looking at it, we can place a trade because it's a 1 DTE throughout the entire day. So let's say, let me chart out this high here. So in the first 60 minutes, so 9:30 here is the first time. Here, right here, 9:50, 10:30. Yep, so the high of the first 60 minutes, oh shoot, was right here. High of the first 60 minutes was right here. Awesome, good to go on that. Now, we basically have all day to wait for it to get here. So it's currently 12:20, so that's about 2.5 hours left of the market. If in 2.5 hours left of the market, it comes up and breaks this level, we're still going to enter the trade because we're going to hold it overnight. We're going to collect that theta decay from overnight and then trade the direction that way. So you have up to all day for it. Now, in all honesty, the probability of this coming all the way up here and breaking is very unlikely. But you can see here on this instance, in the first 30 minutes, it formed the high here. And then it took most of the day. And then it broke here at 2 o'clock at Central Standard Time, right? No, this is EST. Work at 1, whatever you want to consider it. Broke around 12 here. And then it kind of went out and did that. But anyways, good question. We can enter the trade throughout the entire day because it's a 1 DTE, so we have the other day. So yeah, the bot will enter anytime between after the first hour to 5 minutes before the market closes to enter the trade if it breaks above that resistance point. So the options auto trader settings is between the right after the last hour and 5 minutes before the market closes. If it breaks above that resistance, it's going to enter the 1 DTE trade. Let's see, 3 more Q&As here. If a trade is open today and does not close the day, a second trade cannot be open tomorrow? Question mark. Depends on the buying power usage, right? But remember, we're setting opening highs, and so okay, I guess it depends. Let me break this down. If you have under $25,000, this is where it kind of comes in. If you have under $25,000, you're subject to the PDT rule. If you're subject to the PDT rule, there's two options. One, limit your bot to only trade 3 times a week. Okay? That is option number 1. Okay? If you limit your bot to trade no more than 3 times a week, you'll stay within the PDT rule, you'll be fine. Option number 2 is remove the exit rules. Okay? remove exit rules. And now, why would we want to remove exit rules? Well, because if we don't exit the trade and we let it expire, well, guess what? We didn't close the trade, so it doesn't count as a PDT. After backtesting this, having no exit still works, but it's more variable. So as you saw the backtested return, it looks like this, right? It's like that. Um, if you remove all your exits because you're under 25,000 and you want to trade this every day, you just want to let it expire, it looks more like like this. So it still gets you to where you're going, but the amount that you lose when you lose is quite large. You do get to make a bit more though, but you're losing a lot. And the whole goal here is to have that consistent return where there's no huge losses. And so that's why we have our stop and our take profit. Anyways, if you're under 25,000, you're subject to PDT rule. Those are two options. My ideal option would just be let it trade 3 times a day. Sometimes you might have the bot just, a lot of times the bot just may hold overnight and then it'll close the next day. And guess what? Not a PDT rule, so it's fine. Anyways, if you're above $25,000, you're basically just letting this go every single day it triggers. Now, on average, you're looking at 3 trades a week. Okay, so this is not going to execute every day. When we look at the historical data, it places 3 trades a week on average. Obviously, some weeks might have no trades. It's just a bearish week and the market's going down, so there's nothing to do. Other weeks maybe every single day, but on average, we're looking at 3 days a week this bot will execute a trade. I don't think I answered that question correctly, but I did go into some other topics there. Okay, let's see. If a trade is open today and does not close today, a second trade cannot be open tomorrow. Great question. So first off, this is talking about buying power usage, but then when it comes to opening and closing trades, if it typically is going to close the next day, either for a stop or profit. But if you do happen to have another trade open, then it's it depends on how much buying power you have available, right? Just like with our monthly income bots. If you have enough buying power available and you're not using it all yet, then it will place another trade. But these trades, right? We have an hour or more to actually be able to enter the trade. So you're giving your trade, most of that day, the next day up to an hour. And typically theta decay is very rapid on what is now a 0 DTE bot the next day or 0 DTE the next day. And so you're going to close that trade out before the next one ever opens. Typically, you don't have overlapping. It does happen very frequently. It can happen, but most of the time that trade gets closed out before. And if you do have a trade running already, it will open a trade based on how much buying power you set available for that bot. Okay. Can it carry over into the next day opening? Absolutely. In that example I showed you, July 3rd, my bot did. No, this is the first ever trade I did right here. This $470 return I got was from it entering here and then gapping up the next day and then closing that next day. So this was awesome because obviously I got to have a 94% return, which is pretty good. But yeah, this was an instance where it held overnight. It's completely okay to do that. Because like I mentioned, overnight theta decay is still impacting you. So it's going to help either make more or offset losses if it goes to the downside overnight. Yeah. So any other questions about that? Is that making sense? Feel free to put it in the chat or in the Q&A channel. That's sweet. That is the 1 DTE bot. The ROI on this thing is awesome. Margin for approximately 1 week, 1 win per week. Yeah, exactly. That's why Trump, as I mentioned at the beginning of this training, I am not a 1 DTE or 0 DTE person. I've always said never do it, but I'm personally running this strategy on my own account because of purely the amount I win when I win and the amount I lose when I lose, right? I win 250 and I lose 300 and I have a 60% win rate. If I knew nothing else about that trade, that is a bet and a trade should take every single time. But what I also know is that this is an opening range breakout trade, which means I'm already aligning myself with the direction of the market, which means if the market breaks above a resistance level, showing there's bullish momentum, I take a bullish trade. So across the board, great trade. So yeah, if we look at it from a statistical perspective, like Trone is saying, I can break that down here too to show what he's saying. Pretty simple here. But okay, if we have three trades a week on average, and on average we have a 60 something percent win rate, that means we have two winners and one loser. One L, two dubs. This, as you saw, on average makes you $250 per winner. So let's say on average we have two wins. That's a $500 profit. This is for one contract and one loser. So that's going to regenerate, let's say 300, and let's just around 320. That means my net profit is going to be $180 per contract. And it takes me about $1,500 of buying power per contract. So I can't do the math like that. So 180 divided by 115, that's a 12% return on your money per week on average, which is great. Anyways, there's risk, there's volatility, nothing's perfect. Obviously, not saying this is perfect, but I am saying if we're able to allocate a small portion of our account to this, it can really help juice our returns, bring in daily income while we're waiting for our monthly income big boy trades to close out and generate that monthly income. So by pairing these two things together, you really do set yourself up for success. And yeah, that's it. Scott here says, if the trade closes out the next morning and it was at your max buying power, will another trade be placed on the second day after the prior trade closes? Yes. Yes. This bot is only allowed to place one trade per day. It doesn't matter if a trade had already closed that day, right? So let's say on this instance, this because my bot placed these trades back to back, right? So this is July 2nd, my trade right here. It broke here. My trade entered. What happened is it didn't close out. It closed out the next morning. And then an hour later, it placed the next trade. Oops. Placed the next trade. And then it got out right here. So, entry on this breakout, close the next trade on this close. Then the next day, it traded on the breakout and then closed at the high. So yeah, it enters one trade per day. Excuse one trade per day. If another trade closes that day, it's fine. I'll still open a trade. Great question, Scott. Let me make sure I answered all the Q&A here. Pat says, should all bots have market crash safeguard on? Great question. So this is more of a portfolio question, which is fine. And the answer is no. Let me break this out here. Daily chart here, put on our market analysis indicator. Let's actually go to ES. Get a better understanding here. Let's dive into this. So what the market crash safeguard says is that, hey, if the market comes into this range right here and then breaks below it, right? So if it comes up above this range and then breaks back down, the chances of the market crashing and moving lower is higher. So it's going to close out your winning trades, close out your trades in general, and then give you a 30-day reset period before it allows it to re-enter the trade. That way you can allow the market to reset, like something like this. Get out before this, get out before this, get out before here, right? It's not going to work every single time here. This didn't trigger, but it's not every single time. It does help a lot, right? And so, with that in mind, we do not want our bearish bots to have market crash safeguard on because the market crash safeguard will prevent it from entering during the next 30 days of the market trending down. And so, a bearish bot should never have on the market crash safeguard because then it would prevent it from doing its job, which is entering when the market's trending down. Your bullish bot is the only bot, or maybe your free money bot as well, depending on which one it is. But your bullish bot should be the only one that's running the market crash safeguard. Your bearish bot shouldn't because you want it to make money down. And the opening range breakout has no settings like that. When you click on to use that bot, it doesn't have the market crash safeguard set because we run this strategy in every type of market. If the market's trending down, no worries because we're only going to trade once we break the high. And so, with that, the opening range breakout already factors in the micro trend itself by using the opening range breakout. So when it comes to market crash safeguard, only to be used on bearish, only to be used on bullish, not to be used on bearish or opening range breakout. Good question. Sweet. Any other questions, whether about how this fits into your portfolio, this strategy, or anything in general about our option spot portfolio system? Well, I'll make some conversation while I wait for you guys to ask a question. If not, it's all good. But basically, what's going on here is this is the options bot portfolio system. We have a monthly income system that brings in the consistent monthly income, aligns with the market to have that consistent return. We use a small portion of that remaining balance to put on the daily income bot and let that run. Obviously, start off with paper, see how it works, move it to one contract each of the trade, and then slowly scale up from there based on what your account size allows. But even doing one contract, two contract, three contracts is another, $1,000 or so a week, which is pretty good. Um, Right, it's about $180 we calculated on average per week with winners and losers. So it's about a $200 profit per week. So if you're doing three contracts, that's another $600 a week, which is not bad at all for just a side bot. Anyway, so that whole system together, the monthly income system, the daily income system, is what's called our options bot portfolio system to help you make money in every type of market almost every day. Again, market allowing. Sweet. There is one more question here. David says, now that we have the daily income bot, should we not use the bullish bounce strategy or bearish rejection? Yeah, so the great question. The two core bots is a bullish bot and a bearish bot. A bullish bot when the market is trending up, a bearish bot when the market's trending down. You can run your bullish bot here. And then in this zone, we run a combination of bullish and bearish bots together. Now, when you have your bot setting as bullish or bearish, it does this for you automatically. And then this, I would say that is the bear essential, a bullish and bearish bot. If you want to juice up your returns even more, what you can do is you can add the free money bot, which would be this would be the free money, bearish rejection bot, and this would add the free money bullish bounce bot. So again, not required, bullish, bearish, essential, aligned with the market, which the bot does for you. If you want to juice up your returns, do the daily income. If you want to juice it up even more, do the free money bullish, free money bearish, free money bearish, free money bullish. Sorry, reverse. But essential is the long-term bullish and long-term bearish. Essential to generate consistent monthly income. Juice returns with the daily income bot, and juice it even more with the free money bots. Make sense? So basically, we're starting with something as simple as can possibly be, which is a bullish long-term, bearish long-term, adjusted to the market when it's trading in the direction we want. And then we can juice up our returns as we want. A daily income bot and the free money bots as needed. Again, all those settings are inside the options. Auto Trader, you just say, hey, this bot is either a bullish bot, a bearish bot, it's my daily income bot, or it's my free money bots, each one. And then you can set those, and then it will only trade it during those particular markets. Sweet. For those of us switching from the four bot system, what should we do when we switch to the new bullish or bearish bot? Deactivate the old one? No, so yeah, so the bullish or bearish bots you were running before, the same ones you're running now. It's literally where there's if you were set up with the four bot system and you had your bullish bot, your bearish bot, your sideways bot, and your free money bot, all that you're doing is this stays the exact same. This stays the exact same. Free money, that can stay the exact same. The only thing that's changing is this, and you have the option to do the daily income bot instead. So there's literally nothing that needs to be changed here. It's still, a four bot system if you use all the bots, right? You have the bullish bot, all the settings stay the same. Bearish bot, all the settings stay the same. Our automation system still works. Nothing you need to change. The sideways bot got removed because as I was looking at like, I want to make this as simple as possible, and that breaks down into just a bullish and bearish bot. And then I was like, okay, well, what about the sideways bot? And I looked at all the history of my trades, and I realized that most of my losses came from the sideways bot. And that's because, I have a defined top and a defined bottom. If any one of these breaks, I'm losing money. And so instead, I removed this and I installed the daily income bot instead. And then again, you have the free money bot as well. So if you're coming from the four bot system, nothing needs to change besides removing the sideways bot and installing the daily income bot if you want. What's the strategy with the free money bot? Yeah, great question. The free money bot is all taught inside of the program. So when you're inside of the Ode Income Accelerator coaching program inside of Circle, there's an in-depth training for each specific bot. But the free money bot right here, this is simply a put debit spread strategy. And now let me just clear out. There's too many drawings here right now. Okay. This three money bot right here, oops, come back, is a put debit spread. And now it's strategically a put debit spread because right here, volatility is low. And when the market drops, volatility is going to increase. And what trades take advantage of a volatility increase? That's a debit trade. So that's why we do a put debit spread. Not only does it make money when the market drops, but when the volatility spikes, which it inevitably will, then we're not only making money on the direction of the trade, but we're making money on the volatility change. Same thing with the free money bot down here. This is a put credit spread. Why? Well, because put credit spreads make money on the way up, so now we're making money on direction. And in this instance, volatility is very high, and as it goes up, volatility will decrease. So put credit spreads not only make money from the upward direction, but from the volatility change. So the free money bots only execute in these markets, and they are designed to take advantage of both the trend and both the volatility play. DL says, is there a type of market we should not run the daily income bot? Yeah, so I've been testing this, back testing it for multiple weeks now, and then, putting it into my own trading account. And what I found is that it doesn't matter what markets you put it in. By not running it in a certain market, you actually get worse returns, because it's already factoring in the market itself, right? Let's see if we can dive into a specific market. Let's remove drawings, remove everything. So yeah, it should be running in every market. And that's because it's using the opening range breakout. So it's already factoring in that move. Let's find, for instance, okay. So look, here it was a recent down stretch, right? This recent was a down market. And so you might be thinking, well, this is a bullish strategy. Um, why should I run it here? Well, if you look at it, the high of the day, I mean, the high for the first hour, I don't know exactly where it is, but it's something like here. Guess what? It never broke above it again because it was trending down. So that did not enter a trade. Here, okay, let's see. This high, it did break. So you would have had a loss here, which is fine. Here, breaks the high. Does not close above there. That's a long wick. Closes here, runs up, maybe a close, I don't know. Here, the high is here, it breaks, runs higher. Okay, so iffy. Um, it really just depends. But when that's a bad example because I'm just pulling it up right now. But when I back tested it and I removed, for instance, using our long-term strategy where, hey, we know when the market's bullish and we know when it's not bullish. Come back indicator. Um, Market analysis. We know when the market's trending up and we know when it's not. And so I was like, okay, cool. This is a bullish strategy. What if I only run it when the market's green? What if I only run it when the market's bouncing? And there wasn't like the returns were the same. Okay, the win rate was the same, but the returns were way less because I had less trades that I was in, right? So by not trading during these bearish times, the win rate stays the same, but I miss out on my overall return because I'm not getting my frequency of trades up. So there is no difference running it or not during certain markets. You just run it across the board. The only entry is your 60-minute opening range breakout strategy. These are more Q&A questions. Okay, Paul said, okay, got it. Beautiful, love it. Awesome, sweet. Cool. I think I answered all the questions. I'll give it another minute here to see if there's any other final questions. But that was the training for this month. I hope it lived up to the hype and gave you guys a strategy you can actually deploy and go after. I know that you guys have been wanting a 0 to 1 DTE strategy, and although I was against it, deep inside I was wanting one too. So after talking to I think it was at least 5 different 0 DTE full-time traders, this is the strategy I found and fell in love with, and the one that I'm running. So I hope you guys like that I have this and actually fully integrate it into the software. That took some time for me to build out, for it to, look at it watches the market every single minute of the day, and it goes, okay, what's the high? Did we break it or not? For the 6-minute breakout, and then executes your bot, which is only available for you guys as Income Accelerator clients. So welcome aboard. Anyways, one more question from Pat Ryan. Pat Ryan. For a 25K account, is the cheap for 14-day a proper bear bot? Yes. Yeah, the bear bot is either a put debit spread or it's a long put. The cheap 14-day hedge is a long put. Paul says, Could you ever imagine a separate bearish version of the daily income bot? Great question. I did. I thoroughly tested it where basically, let me explain this for those of you who are new to it. So again, the opening range breakout, right? We're looking for, okay, the first 60 minutes, SPX, the first 60 minutes of the day, we chart out, the high and the low. And so the question is, the low gets broken. Should we do a call credit spread to make money on the way down? And I've run this back test numerous times, and it just does not perform well. And you can run it if you'd like. Feel free to paper trade that version. The back tests don't show it working consistently. And the reason why I think so is because the market, just in general, is an uptrending asset. So when it dips, when it goes down, people want to buy the dip. And so it just doesn't work out that well. So I would like there to be a bearish version so I could always be running some type of version. So every day I could run a trade. But in this instance, it didn't. No, don't get me wrong. I'm still playing with that idea. I'm still back testing it. If I do come across a way to make it work, I will definitely share it with you guys and we can run both sides. But for now, with the current structure and the strategy settings that I found, only trading the upside bullish side was the best performing return. So yeah, great question though, Paul. Sweet. Awesome. Awesome. Well, that was the monthly training. Once again, I hope you guys found it enjoyable. Glad that we had a decent crew here today. Again, a part of the system, there is a monthly bot breakdown where I take a look at your account, understand what's going on, all that stuff. I am putting those together as we speak. So hopefully by the end of today, if not tomorrow at the latest, you guys will get an email from me with a report and a screen share about how your account's doing, anything I would change, settings, things like that. So look out for that email tomorrow. That's basically the structure of this program. We help you install this option spot portfolio system, which is now our monthly income system and our daily bot. And then I'll follow up with you every 30 days to make sure it's in line to help you hit your targets. So based on the targets you told me in onboarding, I'll make sure I bring that up inside of the report that I put together. So thank you guys again for joining it. I hope you have a great Wednesday. Thursday, tomorrow is our weekly office hours coaching. So if you have any questions, want to talk about anything, feel free to show up there, 12 p.m. Central Standard Time. I will see you then. Anyways, thank you guys so much. The recording will be up when it comes up. Install this bot at least on paper. Give it a shot. See how it works. When you're ready, scale up with one contract, two, three, four. And I can't wait to see your returns with it. Anyways, guys, have a great rest of your day.